let's put the spotlight on Vedanta now. That stock was down nearly 2% going into its earnings. Its net profit has plunged 41% to come in at 2,464 crore rupees, a plunge of 41%, and there's also a dividend of 12.5 rupees a share. The fine print. Our colleague Ashesha standing by to tell us more about. Ashesha, obviously, is a counter we'll be watching out for. What happened?
Yeah, so weak commodity prices did lead to decline in numbers on both on a quarter-on-quarter basis as well as on a YOY basis, but the numbers are well ahead of what the street was working with. In fact, we look at the numbers, revenues have come in at 34,100 crores, which is a downtick of about 7% on a sequential basis. EBITDA margins, meanwhile, have contracted by about 28 basis points. They stood at 20.7% in the quarter gone by. If you look at the fall in commodity prices, important to note that aluminium prices declined by about 2% on a sequential basis, and crude and zinc prices also declined by 9% and 7% respectively on a sequential basis. But the cherry on the cake this time around was the dividend. The company has gone ahead and declared a fourth interim dividend of 12.5 rupees per share, and the total cumulative dividend for FY23 now stands at 81 rupees per share, which is much ahead of the total dividend that the company had declared in FY22, which was about 45 rupees per share. In fact, JP Morgan has come out with a note on Vedanta where they are maintaining their overweight rating on the stock with a target price of 350 rupees per share. They say third quarter numbers were well ahead of what they were working with, and the numbers did benefit from one-time gain. So all in all, good set of numbers, and JP Morgan has also maintained its overweight rating.
Thank you very much, Ashesha, for giving us all of those details. We'll be watching out for that stock in today's trading session.